Okay, hello traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, March 10th. We just got the release of US core inflation numbers, guys, right in line with expectations. 6.4 on the core read. Headline inflation year on year coming in at 7.9%. Again, it's a multi-decade high. So right in line with expectations as far as inflation is concerned. We did get the ECB holding rates earlier today. And boy, there's a lot going on. So good to see you all in the room. Hey, Steve, everyone in the room. We've got so much. Well, let me take a step back. There's a lot of things to look at, but a lot of these trades are quite stretched. So we're going to hit DXY, Euro, Aussie, Silver, Dollar Yen, Gold, SPX, NASDAQ, Kiwi, Dollar CAD, and I got a quick cool note on oil here in a little minute. So as always, if you have any other questions or trade setups, feel free to throw them on the message board at any time. Let's jump right in. Here's what DXY looks like. So earlier on the 6th of the month, we were looking at this advance as it was approaching the 2019 high week close. That was 98.84. Here was the initial approach. Here's what it looks like now, a couple of days later. Okay, we tried to push through it last week. That's exactly where we petered out. This week, we did push higher up, again, turning and reversing lower, keeping that focus still on a breach and close above 98.84. All right, so for all intents and purposes, the dollar index is coming off of uptrend resistance. You're getting the pullback here, near-term support, still 97.70. Here's what it'll look like on the daily charts, and here's what the daily charts look like now. So again, whoop. Okay, there's that 98.84 level. We did close above it, pushed into that slope. Here's the reversal. Here's the drop right back down to the initial breakout zone. So the origin of the breakout, 97.70, 97.87. That's what popped us through. We're right there again. Now, this is a major inflection, a major pivot point in price. If price closes below 97.70 today, that's your quintessential exhaustion trade, I think. You'd start to look for a larger sort of pullback in the dollar. Here's what the scalp looked like into the start of the week. All right, and here's what it looks like now. Let me bring that up side by side so you can get a good view there. Well, that was a 4 hour. Let me show you the 4 hour. All right, so here's where we started off the week. Just off of upslope resistance, didn't quite make it to that 99.60, 99.66 level. It's a measured move off the low, the 2019 swing high. You can see we turned right ahead of it. A break of the weekly opening range yesterday has us looking for a late week low. It's Thursday, right? So the focus for me today is all about what kind of inflection, if any, that we get along this key pivot zone in price. All right, right between 97.70 and 97.87. Look for a reaction there today. If that breaks and we do move lower, just a quick retracement. I just want to show you what this looks like. Just off the lows from January. So this is the yearly retracement. You can see, bring it up, that the 618 is all the way down there, right on last year's open. Okay, it's 96.46. The 38.2 comes up right here, so just below it. So I don't want to really put too much emphasis on this retracement though, but I do want to just highlight that region. It's just lower right here. Get the number for you at 97.58. All right, so just keep this in focus here. The whole premise of the trade today, inflation coming in right in line with expectations, not going to shift Fed policy one way or another, is what kind of reaction we get here today at this support. Near-term resistance is 98.27. And again, we're going to require a break above 98.84 to mark resumption for the move higher. So right now it's the focus is rather what kind of reaction we get here at near-term support into 97.58. Questions on DXY? It's been quite a stretch. And I'll show you some stuff that's really interesting in just a moment, but a lot of the trades, a lot of them are extremely stretched. And this is what I told you guys last week. This is where retail gets ripped up. So you want to be really cautious, cherry pick those entries, wait for the market to come to you, okay? Don't start chasing, but DXY, looking for inflection here at support into 97.58, 97.70. So where does that leave us on euro? We just got the ECB interest rate decision holding at 0 rates, obviously. You know, the ECB is stuck between a rock and a hard place, guys. They can't follow suit with what's happening with the Fed necessarily and start hiking rates because of what's happening in Europe. And that's really going to put pressure on them, especially with energy prices rising, larger inflationary pressures in general. You know, it's a sort of a damned if you do, damned if you don't. But for the time being, markets are expecting them to remain on hold. So just like what we saw in DXY, right, stretching off of uptrend resistance and coming back, here's euro coming off of a major level. I just want you to stare at this chart, just guys, and focus on one simple thing. The rally off the 2020 low faltered at the 88.6 retracement of the 2018 decline. All right, the decline off of that high just rebounded off the 88.6 retracement of the 2020 ascent. You see something here coming out? It's an interesting pattern. So if this did cause some sort of intermediate low, near-term resistance is 111.03. We're there right now. You can see that slope that dates all the way back to those highs that we made. What is that in 2008? Okay, that same slope, resistance, break, support, 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 now resistance. So both of them looking at major inflection ranges, DXY and euro, right into the open of this session today. This is the weekly chart. Okay, so remember, we're looking to see what the weekly close looks here. On the daily, it looks like this. And here was our last update on euro from last night. So the rebound off of key support, off of downtrend support, exactly where you would want to see it. Here's the rally, initial resistance, 111.09, backed by 111.50. Okay, broader bearish invalidation is right here at 1217, 1231. That's the objective monthly open for the March calendar month, and it's the 618 retracement of the entire 2022 trading range. Intraday looks like this, same setup from last night. All right, so resistance, resistance, bearish invalidation. Now, one other thing I just wanted to note, the high propensity for markets to fill gaps. We still do have an uncovered gap from euro from 1271, okay, from that open last week where we gapped lower, never filled that gap. So just a level to keep in mind, just above that bearish inval. Here's the 120. Questions on euro? We're pretty spent on economic data for the rest of the week. The only thing I would highlight is tomorrow's employment figures out of Canada. Expected to see a gain of 160,000. Unemployment's actually expected to fall from 6.5, excuse me, to 6.2. So we'll look at dollar CAD in just a moment. But I just wanted to cover definitely DXY and euro. Next up on tap from last night's update was Aussie. And the focus here was we broke below the weekly open. We came into a major pivot zone. And if this reversal is a larger turn from downtrend resistance, the rally should terminate ahead of this level. Okay, this level is the 618 of the drop off the weekly high and the weekly open, somewhere around 73.71, 73.66. Key resistance on Aussie near term. Here's what we're looking at on Aussie. But before we even get there, I just wanted to highlight Aussie is at a huge inflection range. I showed you guys this on Monday. Okay, first is the 38.2 of the entire 2021 decline. Second is this low week close from May of 2017. Third is the 52-week moving average right there at 73.97. Fourth, just in case you needed that fourth resistance level, basic trendline resistance off the highs. 1, 2, looks like we just got the third. So the focus is on that turn from resistance. This is a pretty hardcore resistance, guys. I think you would just agree. We just noted 4 technical aspects that are all lined up just into the 74 handle. Okay, daily chart looks like this. One other thing I'd note, okay, this is the weekly chart, right? This looks like a breach of what could be interpreted as the yearly opening range, okay? If that's true, we'd need to see a topside break above that slope to really open up the top side for Aussie. You're looking at 75.30, you're looking at 76.10. But right now, we're at resistance. Here's what it looks like on the daily chart. So we got the initial thrust, really nice reversal candle, okay? That was back on the 7th, right into the open of the week. Really nice reversal candle. The pullback came into support. As I noted last night, if we are moving lower, if this is a rejection of downtrend resistance, the rally should be capped by that region just higher from where we are right now. Here's what it looks like on the intraday chart. 618 off the high, weekly open gives you 73.66 into 73.71. I'm looking for a stretch into this region. If we do get the stretch into this region, we're closing down short positionings, going break even if you leave anything on there. But really the risk is for sort of an exhaustion move for a move lower. All right, so I'm looking for inflection here. If, by the way, we get through the weekly open 73.70 or above, forget that idea. But for me, at least by my part, my humble opinion, the technical suggests that we should be looking for a possible turn, an exhaustive move into that region at 73.71, 73.66 later today. No change to any of those levels from last night. All right, that's Aussie, number 3, making good time here today. Number 4, as popular demand, I don't see Ty in the room here today, but here's silver. So I haven't really been a big silver trader for years. I can't remember last time I really got involved heavily with trading silver, but the levels have been pretty good, and I've been getting requests from you guys about this, so I wanted to make sure I covered it in depth. The gold chart looks better, in my humble opinion, but all things held constant, here's what we're looking at with silver. This is the weekly chart. So we broke basic trendline resistance. You'd sometimes think this is just a 2-touch, right? So we want to wait for the third to confirm, but in fact, this is a 3-touch. 1, 2, 3, right here. So this is the 4th and break, right? So it gives you a near-term breakout while above 25.40. That rally reacted yesterday into the 618 retracement of the yearly decline. That's all of last year's range. It's an important level. So you're getting some kickback off that. Cool. What does that kickback mean? Here's what the daily chart looks like. If this slope is intact, this is a basic low, high, low from the advance off last year's low. Median line breaks look pretty good. Right off of the 75% parallel, here's the pullback right back at support. So right now, the immediate focus is on 25.27 into 26.78. This is the immediate focus range. The risk is we rebounded off of uptrend resistance and moved down into uptrend support. You're constructive while above the monthly open. You're constructive while above the January high day close. You're constructive while above that slope. That gives you 24.46, basically 24.50s. All right, top side breach, you're looking for 27.31 and beyond. But the whole focus, again, I take it back to what I said earlier in the webinar, guys, is a lot of these markets are really stretched. The war headlines have been sustained. So think about it from a sentiment standpoint, guys. You get a war headline, the markets react. You get another war headline, markets react. We got a hospital, and again, don't mind me talking so callous about this. Obviously, the humanitarian, effect is catastrophic. We hope and we pray for all these people, but again, looking at it from a trading standpoint, guys, you get all these headlines, a hospital was bombed, the market starts to get numb, okay, to these initial shock war headlines. So it's not going to be buy gold every time you see a bad news in markets, buy gold every time you see a new bombing of a new hospital, right? There's exhaustion in the market, there's a numbness that settles in, and I think that's what you're seeing on some of these trades, which are really stretched, right? So just a note of caution there. Here's what it looks like on the intraday chart. Within the confines of that pitchfork, okay, that I showed you on the daily, there's this embedded one. This is just off of this year's lows. Shows that we just turned ahead of the 75% parallel. Here's the 25% parallel support, further highlighting 25.27 as support. resistance is still at that 618. So bullish inval is 2440. So that's 2450 level I was telling you about. That's bullish inval. Even if we break lower here, it's a weekly opening range break. That's really the max loss you should look at if silver is heading higher. All right. And as you guys know, I'm constructive on both of these. I'm constructive on gold. I'm bullish on silver. I think both of the com block in general is going to be in a pretty sustained uptrend. That said, you know, we're coming off of uptrend resistance. So trade accordingly. Quick note on silver. Any questions on that? Number 4. All right. Previous night's update. Here's what we looked at. Oh, there's the silver levels, guys, unchanged, okay? We're sitting right here. We're just bouncing off this level. Silver levels remain unchanged. Beyond that, we were looking at dollar yen the previous day. Dollar yen doing dollar yen abominatory things. The only thing I have to say about dollar yen today is that we're at resistance, and that resistance level was clearly well defined by that 116.13, 116.08 level. We're there now. Okay, I'm going to take you back to the daily charts on this first. This level has been telegraphed for us, okay, literally since the beginning of the year. Okay, the August 2015 swing low dates back here. We highlighted that in the first week of the year as it converged on the median line. We got a decent pullback off that. Guys, for reference, the yearly opening range in dollar yen is still preserved. The February opening range for dollar yen is still preserved. Guys, the January opening range for dollar yen is still preserved. Here's your January open, January high, January low. So this is a range any way you slice it. Now, you could argue that there's a range within a range, and I'll show you that in a moment. But my point being is if we get a legitimate close above 116.08 on a weekly close basis, sayonara. All right, you're looking for 1690, you're looking for 1790, which is the December 2016 high week close. But until you do, man, we're at resistance. We're at the top side of the range. Here's what it looks like on the daily chart. This is not only all those levels we just noted, but 1613 also ends up being the yearly high day close. So you're adding further emphasis, further conviction on this being a critical resistance range. Now, it looks, one could interpret, it's still early in the month, but one could interpret that as a possible attempt at a break of the March opening range, right? You set a low, you test the high, you fail, you test the low, you fail. Here's the break. That being said, means nothing until we clear 116.13 on a daily close basis. All right, so dollar yen's at resistance today, guys. Look for a reaction. Here's what it looks like on the intraday charts. Again, no change to any of the levels that we looked at last night. We're right here. We're right here on slope. Breach from here, 1635 and beyond. But until we do, you're at resistance. You're at resistance. Questions on dollar yen? It's number 5. All right. I'm going to take a segue back into gold. But before I even jump into gold, guys, I do want to take a quick note on oil. I haven't been writing about oil because there hasn't been a near-term setup, okay? This is a one-way trade, or it has been for some time. But I did publish this chart on Daily FX early in the week as we were trading up here, and I just wanted to show you how critical. Hey, Ty, great to see you in the room, brother. You just missed silver. I'll have the update for you published on SB as soon as this is over. But man, this is really important stuff. So no, S&P, NASDAQ are coming right up. You didn't miss that. Coming right up, Ty. So look, I don't even know. I'm like a kid in a candy store with this. Look, the break of where this popped. Let me show you this hold on one sec. I just want to show you this because it was so impactful for me, kind of looking at this report. Not want to share daily FX stuff with you, but here it is. Just want to show you, this is what the chart looked like just 2 days ago. This is the weekly. And we published this screaming, hold up, this is big resistance. Okay. Did you have tech trouble on Tuesday? No, I had another obligation. I couldn't do the webinar on Tuesday. Ty, and everyone in the room, always keep your eyes, guys, on the homepage. I always keep this updated with when the next 2 webinars are at least. So if you see Tuesday off there or Thursday off there, there's probably something on the schedule that hindered me. But for crude, the focus was this 2008 high week close. Now, that's the record high week close in oil. Here's what it looks like. It's the highest we ever registered in oil prices. The week for that high closed right here. You can see that several weeks after that high was registered, okay? Back in September, we went back and tested that same level again before resuming lower. Okay, so as we were approaching that level back on Tuesday, I was like, yo, hold, full stop, red alert. This is a huge region. Okay, you need to close above 129.29 to validate resumption of the broader uptrend. Okay, what else were we talking about? Last week when we were talking here in SB, we were talking about 112.21 into 114.80 as key resistance. Based on what we're seeing right now, the close looks like we just held resistance. Possible exhaustion? Maybe. I got more for you. A look at momentum, okay? So if we take a look at momentum, and this is just basic RSI 14, but we put it into a histogram, okay, to give us each day's momentum reading. The momentum reading we got last week into that close right there was at 80 and change. Guys, that's the highest weekly momentum reading we've seen. You see the line there in gray. Let me make it red. Oh. Okay. That's the highest momentum reading that we've seen since August of 1990. You know what happened in August of 1990? That's when Iraq invaded Kuwait. So you still had that same energy shock of geopolitical events really roiling markets. So, well, that's an interesting tidbit, Mike. All right, cool. So momentum ran. So what does that mean? Well, if we take a look back into that 1990 time period, after prices registered that 80 plus read on momentum, we got a couple of weeks of consolidation, a couple of weeks of capitulation. In fact, the pullback was more than 21%, okay, off that high before we pulled back to register another high 7 weeks later. That high 7 weeks later measured up to a move of another 40%. It was less, 30%, right? It's 29%. Yeah, 29% higher before turning over. If we take this occurrence in relation to what happened in momentum, 28% higher from where current prices were at would put you at $165 a barrel. So if price action is going to mimic any which way of what we saw during the Iraqi invasion of Kuwait, you're looking for a couple of weeks of capitulation, a couple of weeks of some back and forth before a final rip, pushing us into a new high. Now, this is a lot of real in-deep technical stuff, right? Studying a price action, all that good stuff. But let's take a look back at what price is doing now. Does that kind of jive with what we're looking at? Well, if we topside break beyond here, the first level of interest is 145 into 146. That's the record high in oil. So that's all to say, guys, that based on what we're seeing in price action, this is actually something we've seen before. We would expect that for the next couple of weeks, you're going to see some back and forth, maybe even lower, up to 20% of a decline off the high. Mind you, right now, we've already did 11% just on that drop, right? Some more sideways price action before at least another stretch. 30% would take you above 145. The measured move, the first measured move of a breakout of the high actually targets 181. So guys, this is weekly charts. I'm talking real long, big picture here, but the study to me was so impactful. I thought I'd share it with you guys here today. So expect sideways, maybe lower, maybe some real back and forth, ultimately to register a new high. By our count, at least a check of the record high at 145. All right, so that's some really interesting price action. Hope you found that as interesting as I did. But looking at oil, I think it's something really important. So what does that mean? Into the close of the week today, the focus is on what you do here. Remember, on a weekly close basis, we never even scratched it. So if the immediate upside is to follow through into next week, we need to close above 1480. Okay, to 2011, 2013 swing highs. Daily chart. I don't really have a setup on this, but I will just show you what I'm looking at here on the daily chart. Here's what it looks like. It's really, really messy, but to show you the extent of the decline, okay, just off of yesterday's high to yesterday's low was an 18% round. Expect volatility. Need to close again above 114.80 to keep going. Constructive above 100. Yeah, I see your question there. Bullish invalidations at 100. I don't like leaving it that low, but on the magnitude of the break that you got, you have to be objective. And objectively, based on slope and time, 100 is going to be that level that if you break below, you could safely assume that we've registered a more important, more significant technical high. That being said, looking for a low ahead of 100 for a stretch higher. Okay, it's going to be very sensitive to news coming out of obviously the disaster unfolding in Europe. You've got the US and the UK now banning Russian oil. I was seeing on the headlines earlier today, Russia, there is talks that Russia is also looking to ban different sugars and different hard commodities on their ends and soft commodities on their ends to the global market. So guys, this is gonna get worse. It's gonna get much worse. I'm not talking about the humanitarian effect, guys. Our hearts go out to everyone involved, but from a technical standpoint, from a trading standpoint, we need to be ready. We need to expect volatility. We need to not chase, and we need to maintain discipline. All right, so quick tidbits there. Back to the charts. Here's what gold looks like. That's number 7. So gold on the daily charts, we extended into, just missed a kiss of the record high, which is 2075. We hit that back in 2020. We just missed the high that we registered this week was 2070. Okay, so just high of that 2075 to $5 off. The weekly chart, I think, is pretty self-explanatory, guys. We've not only broken above this year's opening range, we've broken out of last year's opening range. We closed above last year's opening range last week. Keeps the focus higher while above 1923 into 1903. That $20 range is still critical support. Resistance still 2033, and we need that vault above 2075 to mark resumption. So the weekly chart really has a lot to be desired, although it's very clear as far as where we are in trend. Here was our last update on oil, or gold rather, was right here. So I'll show you the daily chart in a moment. Here's the daily chart for gold. Super clean, loving it. All right, loving it. 2066 into 2075 was a region that we were watching for quite some time. Again, you can always go back, guys, to the previous charts to see exactly where we were on this trade. And here's what we were looking at on the daily charts back then, okay? So the 736 retracement, we've kind of already eliminated that. That was right here. But right here into these levels, the 2020 high day close, we already broke above that. So this was back on the 6th. Here was last night's, or this was back on the 8th. High close, 2066, record high, 2075. That's exactly where we just topped, okay? Beautiful, beautiful region, just to show you on the whole. Here's the daily chart, all the way here. Here's the high close, here's the high, here's the stretch, okay? So quintessential exhaustion, you got the pullback, okay? And we're sitting at support, 1977. Near term bullish inval, 1950, okay? Resistance is pretty clear on this. Pretty clear on this. So if gold is heading higher on this stretch, support should hold at 1950. Okay? Yeah, I'll get right here. Ty, here's the squeeze, brother. High close, record high. All right? And that line you see in there in magenta, yeah, that's the 2019 trend line. So let me just to give you some reference, right? So you have multiple touches, 1, 2, 3 last year, right? And then you started pivoting. Every break though has seen strong inflection on both sides, right? Even this last advance, boop, right above it, instant support. So I love the slope on this, loving it. All right, intraday, here's what it looks like. Again, this is the 4-hour chart. 2-hour doesn't look all that much more impressive. Here's the weekly open. You slam into the resistance, you pull right back. Your weekly opening range is preserved on Thursday heading into the close of the week. Near-term support, bullish inval. All right, a similar scenario I'm expecting here, guys, as oil. It doesn't have quite the same technical merits that I can go back and do a historical price study and come back and say X and Y, but it is a trade that is bullish, that is extended, it is stretched, it's come off of uptrend resistance. Noise, maybe a little lower, but we're looking for that low to settle. We're looking for that low to settle. It's number 7. Any questions on gold? All right, Ty, it's up to you, brother. Here we go. SPX and NASDAQ, number 8 and number 9. Here's what the SPX looks like on our last update. All right. This was, again, back on the 8th. We were coming into median line support here, the May low day close, which was the low that caught the low earlier on that decline into February. So we're looking for reaction here. Ultimately, we were talking about the fact that SPX had come off of downtrend support, and we were looking for the recovery, right? Here's what it looks like on, first, I got to show you this. This is going to blow your mind. Here's SPX, guys, on the weekly charts. If you ever had your doubts about technical analysis and the viability of using that as a trading strategy, good morning and welcome. This is the same slope from the original slope we've been looking at. This is the origin, parallel, resistance, 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 parallel, support, support, all through last year. A parallel extending off of the 2020 lows. Support 2 weeks ago, support once again. And this is why I've been telling people, if we push through and we make a landmark break below 4,200, basically below 4197, that's pretty big. That's the last ditch slope for the upslope that we've been in for the last 2 years. You can say 3 years almost. And if we break below that, you're looking for a measured move, 2 equal legs off the high. Again, give you 39.93. So this week, once we slammed into that level, I said, whoa, whoa, this is actually a good spot for a near-term recovery. If that recovery is still just within the downtrend, it should be very short, and the break below, again, would risk a larger dump. This is the weekly charts. Take a picture, take a snapshot, reference this on the Friday close, and you'll know what the heck's going on here in the SPX. Here's what it looks like on the daily chart. Okay, Perfect rebound. Again, that's the same slope we were looking at on that weekly chart. Downtrend support, you had the median line right there. We dropped into it. That's where we start to look for the recovery. We said if this is still heading lower, look for a high ahead of 43.13. That's the 618 of the most recent drop. Converges on downslope. Here's what it looks like on the intraday chart. Get to the 4-hour. And here's what it looks like back then, right? So that ended up being actually a decent pivot for the recovery. Here's the rally. And again, looking for exhaustion ahead of that January close low, ends up being the exact 618 off the monthly high. That's your near-term bearish inval. Okay, so I'm looking for a high ahead of this region. If we are heading lower, need to see a break of that median line to go for 41.17 and 40.35. Again, 39.95 being sort of the major key support zone you're looking for on the downside. Sorry, just had to snap those levels. Looks a little cleaner. Questions? You can ditch this at this point. Ty, feel free to take that picture. Beautiful setup, guys. Beautiful setup. For all intents and purposes, and if you're not in anything, your immediate focus is on this break, the wedge break. Literally forget the 2020 trend line. That's almost the same slope. So you're looking for this wedge break right here for the next move. All right. Now, where does that leave us on NASDAQ, Ty? It's a very similar scenario. Let me take a step back first from the weekly charts. Here's what NDX looks like on the weekly charts. The critical supports here is a little bit different, okay? NASDAQ leading the charge has already broken that last ditch effort. You got 2 rebounds off it before finally breaking below and closing below. So NASDAQ, excuse me, has already made that break. What else can I say about this? The main key support zone that we were talking about on that break was 12,947 into 13,106. That's the 2021 low week, right? It's not the low week close, excuse me, low week close. It's actually on the downside here. So I got to open this up. I'm sorry. Little hiccup there. Your 2021 low week close is actually right here. Okay, that gives you 12,947 into 12,668, a little bit lower. That's absolutely critical. You also have the lows that you registered back here in May of last year. You also have the objective 2021 yearly open. That's 12,950. So there's a lot logged on here. There's a lot here. So that's from the weekly charts, right? Daily chart for NASDAQ looks like this. Same slope that we're looking at with SPX, right? You're almost looking at the same exact setup. You're at support. This is the 786 retracement from the 2021 March rally, 183. Again, there's that 38.2 at 12,947. If this is still heading lower, we are looking for a high, ideally ahead of the monthly open, which is right here at 14,197. Bearish inval, 14,450 basically. Okay, so initial resistance, bearish inval, a break lower, you're looking for 12,947. That's absolutely critical. Basic 38.2, the entire advance off the lows you made in 2020. Now, it is worth noting that on these declines, both on SPX and NDX, you are starting to see daily divergence, most visibly by turning it into line chart making a lower low, the oscillator making a higher low. Okay, now When these divergent points, I always tell you, are above 30, below 70, that's your butter zone. These tend to be stronger signals than when you get something below 30 or above 70. So that's all to say, guys, that the risk of downside exhaustion for these trades is starting to materialize on the daily chart. We're testing major longer term slope support. So all I'm saying is on both of these, SPX and NDX, as that coil, breaks out, we're likely to get a decent move. Here's what it looks like on the intraday. All right, no change to any of the levels from that update back on the 8th. Questions? All right. That's SPX and NASDAQ, number 8 and 9. Back into the FX front for a quick look at just two majors, Kiwi dollar and dollar CAD. Obviously, tomorrow, dollar CAD has Canadian employment figures, but I do just want to touch on Kiwi dollar. Haven't gotten involved in this one, although I feel like, I know we are on the swing side with Jamie. I feel like this was a missed opportunity, but 68.86. All right, a basic 38.2 of the decline from last year's high. 69.40. It's the basic objective swing highs from 2019. You can see a major pivot in this zone. We broke out of downtrend resistance. We broke back above a major lateral pivot. Here's the first zone. We ran right into it and pulled off. All right, so I'm not so surprised. I also wanted to highlight one additional thing. Guys, this is the objective yearly opening range highs. So if we're gonna break, this needs to be an accelerated pop. It would basically give you a multi-month upside bias. Till we do, we're at resistance. I don't know how to play it. If you've missed the pullback, I don't know how to play it from here. So again, there was the rally. Again, key resistance zone. Really nice play to the downside. The first level that we were looking at was the weekly open. Second level was that high that we made for the February range highs. Third level would have been a basic 38.2. We never got there. And it fizzled out right back into that former upslope support. So I don't know. Maybe we leave this slope on here, guys, just for a little bit longer. At the end of the day, it's either a break, clear cut, close above 68.85 to get this thing going, or I still think you risk a deeper cutback. Now that's dollar strength. We looked at the DXY tie already at the beginning of the session, so I'll have this the archive up for you, but it looks a little bit higher. Even if we get a recovery off of support here, the trend, as it were, looks like it's a little stretched. So that's why I'm not too excited about trying to play a Kiwi pullback per se, because I mean, you're trying to play a dollar long, right? Here's Kiwi dollar on the daily charts. Yearly high day close from February. We've already made a new high for the year, but the February high day close, the 38.2, gave us even a tighter zone here, 68.85, 68.57, 68.86. It's exactly where we petered out. It's also the range highs. Okay. Here's what it looks like on the intraday. Like I said, it's not my favorite setup. This is the 120. Excuse me, just looks a little tired. Exhaustion. If you get back into the zone, it might be a decent short against that for near-term pullback, but not my cup of tea. Not my cup of tea. So that's DX. That's New Zealand dollar, guys, for you. Put that on the shelf for now. Can I have the DXY charts to copy? Yeah, sure. Ty, here's the intraday. I put a chart for you on this earlier in the week. There's no change to it, but here's the intraday. Here's the daily. Here's the side by side. And here is your weekly. All right. Last but not least, loony. So dollar CAD, man, this thing's been pissing me off so hard. Listen, I wrote a piece about this on Daily FX as well yesterday, this exact chart. And all I said was, we need to close 28.13, 28.14 if this is going to be a breakout. We've been ranging. 1, 2, 3, 4, 5, 6. This is the 7th consecutive week of ranging below Fibonacci resistance, 2768. High week close from last year. It's the high week reversal close, 2814. Look at this thing. Here's your yearly open. You test the lows, you test resistance. We've been here ever since. Now, after last week's wicked drop and a test of a break of that range and then close back into, it would suggest my initial inclination would be to look for a topside break, right? Sort of your opening range reversal. Fail to close the range lows, you close back into it, propels you on the upside. At the end of the day, it's been unable to get any Momo of interest at all. We're at 56, guys. But come on. So looking for a move in dollar CAD, range, range, range. Here's dollar CAD on the daily chart. Here's our last update on dollar CAD here. Okay, here's the weekly. This was published back on the 7th. Same zone that we just looked at in the weekly chart hasn't broken. Daily, this was the breakout zone. Well, we closed above it and then reversed back below to close below. So what the hell is that? Again, another fake out. Fake out on the close of break of support, fake out on the close of breakout of resistance. This thing is an abomination, okay? It's starting to trade a lot like dollar yen at this point. Momentum on the daily chart, just flat. So guys, again, it's like Kiwi. It's not my cup of tea, okay? Here's what it looks like on the intraday chart, and here's what it looked like earlier in the week, okay? It was a beautiful play on the long. Here was the break, right? We were talking about upside levels, 786 retracement. 2 equal legs would have put us right here at 128.90. That's exactly where we topped. And then, what the hell is this? You know what I mean? It was a beautiful trade into this level. If this was going to hold, wanted the pullback to get support at this trend line and then the rebound. Okay, well, if it's going to break, that's cool. We should be seeing accelerated drop. What the heck is this? So guys, I think you wait this one out till tomorrow. You're likely to get some play. Again, Canada inflation data, employment data is on tap. We're expecting to see unemployment actually drop tomorrow with a print of 6.2% versus the previous unemployment rate of 6.5. We're expecting to see a gain of 160,000 jobs. So may offer some volatility. It's either going to be the break below the February low. Even if that happens, the February open, you're still only looking for a drop into this year's open, 618 support. At the end of the day, 28.90 breaks what you need to mark resumptive move, and then you start to look for a rally towards the high day close. But boy, this thing has been so frustrating. And you can see from a fundamental standpoint why that may be the case, right? Everyone always says, well, you know, oil, right? Canada's a major exporter of oil. If oil is going up, then CAD must be gaining as well. That's CAD strength. That's dollar CAD lower. But as you can see, the dollar has been ripping. And in the face of all that dollar strength, dollar CAD sat tight essentially, right? It joined in some of it, but nowhere near what you saw in euro, nowhere near what you saw in even sterling. Guys, we haven't talked about sterling in quite some time, and I don't really want to get into it because I don't have a near-term setup, but what I do want to show you real long-term is the weekly chart actually has us at a pretty dope spot. 618 extension from the decline off the highs. 1, 2, 3. 30.75. The low we just made was 30.82. Might be an important level. Take a longer term look again. Here's the sterling on the weekly chart. The upslope off the October 2016, 2018, 2020 lows. Median line has been a decent pivot. 25% parallel is right there. So all things held constant, this does look like an objective break of the yearly opening range. You'd be looking for a move lower, but this is upslope support. So I'm looking for a reaction here in the sterling basically this week into next week. The daily chart, yeah, I don't really have anything worth of note here on the daily that I would even, you know, worth showing to you. But that's sterling for reference there on the weekly charts. All right. That's everything that's on my list. Let me know if you guys have any questions you'd like to look at. DAX and Euro Stocks 50 on Monday or Tuesday, please. I can take a quick look at the DAX now. What's the ticker you're using for the DAX, the German 30? Ty? Yeah, okay. Yeah. Okay, so here's the weekly chart. So if we just do a quick analysis on this, let me just see what I got. We got a couple of minutes here, Ty. You've already broken to 38.2. Okay, it looks like it could be a near-term confluence support there. It's way past the 1618. Yeah. So this slope might actually have some merits. It's an objective high, low, high. You're at the 75% parallel. On a closed basis, it looks like that's exactly where you grounded out yesterday. I'd be cautious of a near-term recovery. This is the weekly, okay? I'm still just going longer term here for you. 38.2, near-term resistance. Okay, keep that there. Okay, let me see what it looks like on the daily chart. You try to get some slope to the decline, but this is too steep. This is too steep. Look, I would say you need a daily close below 31.50 to get the resumptive move. Right now, you're working on sort of a near-term capitulation. It's the very similar scenario, guys, that we're looking at with SPX. Okay, you've grounded down, you've stretched back and forth, maybe a little bit of recovery ultimately for the next move lower. And I think that's what you're seeing there with the DAX. Okay. That's an ugly chart. That's an ugly chart. What about the Euro stocks there? What's the ticker you're using for that one? What's the ticker? If we just take the continuous contract, woo, that's not the right ticker. Sorry about that. I'll look it up for Monday, he says. Yeah, look it up for Monday. Hey, I'm all about, here it is. I'm all about the on-the-fly analysis, man. You have nothing to worry about, Ty. I got your emails. I will be responding to you on those in due time. You have no idea what my what my schedule looks like. So I will try to get back to you on that, but let's just take a quick look. Same thing, you sailed through the 38.2 retracement there. It's going to be a similar scenario on this slope, I suppose. Maybe a little bit even cleaner on the top there, on the retracement off the highs. Yeah, this is the same exact trade as the DAX. You've already hit the 38.2. Look, if it's going to head lower, you still have sort of a near-term pivot zone, like right here, right? This is your monthly, your yearly opens right here. Yeah. Okay. If you are heading lower, this is your spot of resistance. Again, this is weekly stuff. I'm just going off the fly here. That's your resistance. Look for high ahead of this. If you are heading lower, next objective level is going to be that is going to be the 618. I know it's a way long way down for where you are, but you've got a lot of pivot zones there. So we'll take a closer look at this on Monday if we have time, or on Monday session is just, there's like 300 people in there. So it's very, very difficult, if not on Tuesday, but we'll take a look at these. Be careful, Ty, chasing these markets that have really extended. Again, I got a lot of people asking about the ruble. Guys, it's not a trade. I'm sorry. That's not a trade. That's a bet. Okay. I don't throw darts. I don't go, if you want to, go to Vegas, I'm down. I love Vegas just as much as the other guy, but that's not trading. Right. So be meticulous and be very selective of where you look for trading opportunities in this specific market. I think we outlined a whole lot today of different setups that are basically just waiting for a trigger to get this thing going. But at the end of the day, all of the risk markets do look like we could see a little bit of a rebound off support. All right, we'll wrap it up there, guys. As always, best of luck trading. Watch out heading tomorrow on the CAD crosses, specifically the employment data into the end of the week. We get Michigan sentiment numbers here for the US as well are expected to fall off. So again, looks like you could be seeing sentiment start to wane, specifically with what we're seeing on the geopolitical standpoint, the inflationary numbers, energy prices are going through the roof. Guys, there's a lot of trading opportunities coming up this month. And I'll try to keep you abreast of all of them. Thank you, Agnes, Ty, Steve, everyone in the room. Have a great day. Have a great weekend. And I'll see you on Monday morning. Cheers.